It finally happened. The US dollar eventually picked up steam. The greenback has been rallying so rapidly that the movement can hardly be called a correction. What happened looks like a collapse of the single European currency in the euro-dollar pair. While markets in Australia, Hong Kong and China are closed for the holidays, other trading floors are bracing for a very turbulent week today. The US Fed Reserve will announce its policy statement on a Wednesday, and the Bank of Japan on a Friday. A key financial forum will take place in Shanghai on a Saturday. After the nonfarm payrolls for May showed a strong employment growth in the United States, and the central bank and markets will need more evidence of a slowdown in the domestic economy. The number of jobs in the US private sector increased by 272,000 in May, whereas the consensus had suggested almost 2 times less, 151,000. Now, robust hiring in the United States is likely to force the central bank to cancel its forecast for 3 rate cuts this year. The only question is how serious these changes will be. There is no longer any doubt that they will be hawkish. Besides, wage growth has accelerated in the United States. Average early earnings on the annual basis locked an increase to 4.1%. Now, further inflation acceleration in the United States economy looks almost inevitable. It turns out that in the best case, the regulator will cap interest rates at the current levels for a long time. A further rate hike now looks realistic. No wonder Wall Street responded to nonfarm payrolls with a sell-offs on a Friday. Nevertheless, at the end of the week, the S&P 500 index jumped by 1.3% and printed new record highs. However, Wall Street stock futures opened flat on Monday, as investors prefer to wait for the May inflation data and the Fed Reserve's decision on interest rates. The S&P 500 is trading firmly downward in the intraday corridor between 5,331 and 5,375 points. Meanwhile, the US dollar, in anticipation of the decision of the US Central Bank, is advancing against its main rival in the basket, in particular the yen and the pound. The greenback opened a new week above 105 points and now looks determined to test its 4-week high. The US dollar index is trading higher in the intraday corridor of 105.00 to 105.30. At the same time, the US currency benefited not only from the hawkish prospects of the Fed's monetary policy, but also from the sharp fall of the euro amid political uncertainty in Europe. Following the European Parliament elections over the weekend, French President Emmanuel Macron announced on a Sunday evening in an address to the nation that he has dissolved the lower house of a parliament, the National Assembly. The reason for this decision was the convincing victory of his political rivals, the National Rally Party. Now, according to Constitution, early parliamentary elections must be held in the country. The markets took this news very negatively and reacted with the euro's collapse. All in all, it's already obvious that European politics has made a strong tilt to the right. The odds are that the French scenario will be replaced in other EU countries. Importantly, European right-wing parties are considered a threat to the economy and the big businesses, and that such election results will almost certainly spook large institutional investors. This outcome is likely to curb investments in the European assets, and this will lead to a weakening of the single European currency. Last week, the ECB expectedly lowered its refinancing rate by 25 basis points. In the light of these crucial events, the euro today found itself under pressure from several serious factors at once. Moreover, according to the ECB President Christine Lagarde, the decision was made almost unanimously, excluding the one vote. Therefore, the euro dropped to a one-month low On the whole, the euro has weakened by 2.5% against the US dollar this year. On a Friday, the euro-dollar pair declined by more than 100 pips during a downward inertial slide. As a result, the instrument left the 1 month trading range of 1.08 to 1.09 and moved deeper into the bearish zone. And today, the euro is expected to continue its fall despite the empty economic calendar. The euro-dollar pair is likely to move down within the intraday corridor today of 1.0700 to 1.0650. Our analysts warn about caution when trading lower. It's important to remember that the rapid accumulation of short positions can lead to their fixation, and this in turn will cause a technical pullback, especially given that the Eurozone's inflation is still above the 2% target. It's interesting how gold behaves on the back of all these events and factors. Meanwhile, the popularity of precious metals is growing against the backdrop of critical changes in geopolitics. Today, the gold price was at its lowest level in the months and was trading in the range of $2,304 to $2,318 per troy ounce. The gold began its fall after the release of the surprise US nonfarm payrolls, which significantly tempered expectations of an imminent interest rate cut in the United States. The bearish trend in gold intensified when the People's Bank of China suspended gold purchases in May after 18 months in a row. Crude oil also came under pressure from a strong report on the US labor market. Since a delay in the rate cut by the Fed Reserve could have a negative impact on the US economy, demand for energy commodities will also go down. Oil prices closed in the red on a Friday. Hence, the start of the new week cannot be very optimistic for the oil market. However, the Brent price showed a weak growth impulse within the intraday range of $79.3 to $80.1 per barrel. Importantly, OPEC and its allies agreed to extend most production cuts until 2025, but 8 countries intend to phase out this practice starting in October. Therefore, oil prices still maintain some stability. Despite the US dollar's rapid rally, Brent reached $80 during the correction. Then buying activity faded again, and this signals a new bearish cycle in the Brent price. However, if the price settles above $80 a barrel at the end of the day, the buyers may well get a second chance for the oil growth. You have watched a review of the global financial markets for today, June 10. Keep close tabs on the markets on the InstaForex TV channel. Feel free to leave your comments. Our experts are always ready to answer all your questions. Thank you for watching and see you online next week.